Welcome to the Cannabis Investor Series, as we present a first-hand look into the rapidly evolving cannabis industry and the opportunities that lie ahead.
Hi, my name's Anna Sarin. I'm Director of Listings Development with the Canadian Securities Exchange. You are joining us as part of the CSE's Cannabis Investor Series. And today we're going to be talking about investing in U.S. cannabis. I am joined by two wonderful guests. So thank you so much for joining me. I'm joined by Ross O'Brien. He is the CEO of Bonaventure Equity, and Nick Gastevich, who is Vice President of V. Gastevich Investments. Thank you both so much for joining me.
Anna.
Thanks, Anna.
Okay, so first I want to start off by you guys talking about your background, what you guys do for a living, and why you're here as part of this conversation with me. Ross, why don't we start with you?
Sure. Thank you very much. Pleasure to be here, and always enjoy participating with your CSE projects. You do great work out there. So we're a cannabis venture fund that was the migration of an investment strategy that we've been deploying for family offices for 6 years when I founded Bonaventure Equity, helping with self-directed venture capital, private equity, and real estate. And as we gravitated towards certain sectors that were gaining the most interest, we put together our first committed fund in order to invest directly in the cannabis sector. We have 8 investments in that portfolio now. We fully allocated from there, and we'll be launching our next fund shortly to continue to support the sector in the space. Background is entrepreneurship first, so we're very operationally minded. We took a long time, go slow to go fast, to get our perspectives around cannabis before we started making any investments. We looked at over 300 companies before we wrote our first check for a year and a half, and didn't want to rush in because there was a lot of this green rush Klondike mentality that we were pretty adamant to stay away from. And also, as you know, I wrote the first book on venture capital for cannabis called Cannabis Capital. That was published by Entrepreneur Media, Entrepreneur Press. And that was designed initially to be a resource for entrepreneurs to help with some of the sophistication around the conversation of financing for entrepreneurs that are approaching guys like Nick and myself, and guys and girls out there who are investing in the space, and sort of bridging that gap. And that was a really exciting project.
Thank you so much, Ross. And I do want to touch on that book a little bit. We'll get a bit further into it as we have this dialogue. The CSE would love to send out a few copies of these books. So the first 25 people that email me requesting the book, we'll make sure that we get you a signed copy from Ross. It is a great resource for those looking to raise capital in the cannabis space. And you did all the work for us. So thank you, Ross. Nick, tell us about yourself.
Thanks, Anna. Yeah, I appreciate the intro. And yeah, I want to echo Ross's statement, just saying thanks to you and everyone at the CSE for really taking a leadership position in serving the U.S. cannabis market. You know, I think it's hard to argue that, you know, without the CSE, we'd be in a very different position today. Just in terms of capital raising and listing efforts, it's been a huge help to even myself, but in the industry as a whole. So like you said, my name is Nick Gastevich. I'm Vice President of V. Gastevich Investments, LLC. We're a Chicago-based family office, traditionally focused in the real estate and private equity space. Back in 2014, we pivoted to cannabis for the first time when Illinois started their medical cannabis program here under former Governor Quinn. 21 grow licenses, 55 dispensaries for the whole state, so we were immediately interested. Fortunately, had our very first investment in the space. We were introduced to a company called Green Thumb Industries, and ended up investing in their very first round, and then subsequently all 6 of their private raises, including their listing through RTO on the CSE itself. 7 years later now, we've made 25 or so investments in the space, mostly concentrated in kind of the large MSOs, GTI, Cresco Labs, Rhino Holdings, Ascend Wellness, soon to go public, Holistic Industries, PharmaCann, as well as tech platforms like Leaf Trade, as well as a few leading brands like Kiva and Cann Social Tonics. So now we look at the space full time, try to talk to as many companies as we can, and just network in the space, just because we have a lot of faith in this industry, where it's going, where it is today, and really just the growth profile ahead.
Well, and I will point out that a lot of those companies that you mentioned are listed on the CSE. So thank you for your support. I know it's meant a lot for the companies that you work with. Ross, when did you start looking at the space? What year was it?
So I started looking at the space with one of our family office investors probably 6, 8 years ago. And candidly, at that time, we'd always believed in the investment thesis, and there was a there. We just didn't know how things were going to play out from a regulatory standpoint, and watched a lot of the advocacy very closely, which has been really the groundswell momentum that's allowed us to get in this spot that we're in today. Collectively as a sector. And we candidly just didn't find the maturity in the entrepreneurs or the same level of sophistication that we were used to seeing in other sectors, and we just couldn't get there at that point. It was just a little too nascent, and that all changed about 3 years ago when we really started to see a lot more quality, sound entrepreneurial ventures coming to the table, and a lot more markets opening up. We're early stage investors, so we're typically seed, Series A, so we do not have any IPOs yet in our portfolio, so we're a little more downstream, I think, than a lot of maybe where Nick is investing in some of the other groups out there. But that's what we had done historically, largely in the healthcare space prior to that. So we wanted to stick to our knitting and really focus on what we know about the foundations of starting early stage companies and the growth signals that we're looking for, and just wanted to try to map that to the cannabis space.
Well, and I asked you that question because it sounds like you both kind of entered at the same time. And I remember the cannabis space about 7 or 8 years ago. I think the CSE had their first cannabis focused company in 2013. So we all started at the same time. And I fully agree with you, Ross. It was definitely the wild, wild west at that time. It was new groups coming to market, didn't have a lot of capital market experience. And it's been awe-inspiring to watch this sector grow into what it's become now, which is just a billion-dollar industry. Billions and billions I know have been raised on the CSE. The US has been such an amazing marketplace for us to watch. Ross, I'm going to start with you first. Why don't we touch on your book a little bit?
Great. So, I think that's a good segue, and would love to hear a little bit more about Nick's experiences as well, as they built their portfolio, to see where the overlap is. But essentially, it started as really a textbook, and I had been approached by a lot of founders and entrepreneurs that were raising money, and I noticed that there was this somewhat lack of fidelity in the conversation between the finance perspective and the business opportunity. Just talking about things like valuation, talking about due diligence and how to structure deals. And I saw a lot of unnecessary creativity in the transaction. So, for example, a lot of entrepreneurs coming and saying, "Hey, I've got a new startup, lend me $1 million and here's how you're going to get paid back." And then you have the conversation around, well, if you're a debt-worthy company, go to the bank, don't go to us. We look for equity returns. It doesn't sort of sync up, and projections never play out the way we put them down on paper, et cetera. So I thought it would be a good idea to just put out some of the foundational concepts around how to build an entrepreneurial venture, what the different financing options are at different stages of the life cycle, how to how to build a valuation, how to run a process with investors, what the term sheets look like, et cetera. And then it took a real sort of left turn while I was doing all the research for it. And one of the things that we discovered and ended up honing in on in the book is there was a real wedge between the investors and the operators in the space at this time. It came out just at the beginning of 2020. And it started to occur to me that a lot of this, challenge in the conversation was, you get a lot of legacy industry people saying, "Oh, this is cannabis, you don't understand it, Mr. Wall Street," right? And then you get a lot of finance people saying, "Oh, they're cannabis people, they don't understand business." And it seemed to me that a lot of that was a symptom of trying to pigeonhole what cannabis is and prematurely calling it an industry. So we actually defined in the book the cannabis economy. And so it's our view that cannabis is a global macro trend. It's here to stay. It's part of our communities for the long term. And as with any macro economy, you will have subsectors and sub-industries within that will be developing, and some of them new and some of them incumbent. And I have a challenge out there to anybody, and I'll give them a free book if they can come up with this. If anybody can point out an incumbent industry that will not otherwise be impacted by cannabis. I mean, it's literally touching every aspect of commerce.
Super interesting. Nick, why don't you talk to us about where you started off? I mean, you said that you kind of started off with an investment or two. You obviously manage a family office. where did it take you when you started out? Because again, 7 or 8 years ago, it was very different than investing today. So how did this start for you?
Yeah, the evolution has definitely been interesting. And, I think when we first started looking, it began right here in Illinois. And I think there was something fundamentally different about what the Illinois program looked like initially, kind of versus the Wild West out in like Colorado, Washington, Oregon, which just were, difficult to invest in and underwrite in any serious way. So here in Illinois, we saw that it was a limited license, highly regulated market, which was a really differentiating factor. That at least gave us faith that, if we invest now, these, whoever wins these licenses, that business isn't going to disappear overnight. It did turn out to be extremely slow. Those early years of the Illinois medical program, we had a couple thousand patients. No one was making money. So back then there was, you couldn't apply any traditional financial metrics to the investment. So it was definitely kind of a larger bet on the industry as a whole and putting money behind kind of, high level operators. We talked to kind of a number of companies applying here in Illinois. And, we were very fortunate to get introduced to the GTI guys early, who were just, given their experience level, PK and Ben Kovler were just steps ahead of everyone else. And then a big factor there was early in the industry, and this kind of grew due to the fact that everything was state by state. You had to develop full infrastructure in each state. That capital raising and ability to, raise capital efficiently was going to be a very big differentiating factor. So that was kind of early on. Our investments were really like who has the money and who has kind of that little bit of experience that allows you to go win new applications as new states opened up. So definitely early on, it was more of a licensing footprint game. There wasn't any kind of traditional financial metrics to kind of go after. I think Ross kind of spoke to this, that, I think that's definitely changed, especially now we have, can go off of more EV to sales, EV to EBITDA multiples, kind of traditional analysis. But it was definitely an evolution from kind of who has this license footprint to nowadays who is a good operator who can put up numbers quarter over quarter and see the development that you're looking for.
Well, and I think you brought up a really good point, Nick. Did you also find it difficult because, I mean, from what I saw in the early days, is the investor appetite was so strong that it worked almost against valuations, because sometimes a company might not have been worth it that much, but people were so desperate to be a part of it that it pushed things sometimes not in the right direction. Did you find that?
Yeah, and I feel like I still see that today. I think when you talk to people who are kind of new to the industry, they think you can just throw money at cannabis and it's just going to make money, when the majority of companies don't make it in this industry. And it's much tougher, even in some of these limited license markets. Like, you have to have just a high level of execution and expertise across a long range of different things beyond just growing cannabis in a facility. The attention to detail on insurance, compliance, banking, their laundry list of different items are kind of needed to succeed in this industry. That's not necessarily readily apparent to someone who's just looking at the space for the first time.
And for this is a question, I guess, for both of you. Nick, I'll have you finish off first, but did you on the same time find it difficult because some of the big family offices, some of your high net worth clients that you both manage, did they struggle with investing in the sector and kind of opening up how they felt about it?
Yeah, I mean, for myself, I mean, we're just managing our own money. We don't take any outside capital. But, we were definitely kind of early into it. And, when we told some people, they would raise their eyebrows, like, why are you doing that? But definitely early stage, it was large family offices and maybe a couple small kind of focused private equity firms like the, Entourages or the Meritas of the world. But it was definitely highly limited as to who was looking at the space. And I mean, that offered both a challenge to the industry as a whole, but also kind of an opportunity for family offices like my own, who kind of took that initial risk or step and saw what the future was going to look like.
Absolutely. And Ross, you do have a pool of clients in your varying funds, don't you? And they're quite high net worth, aren't they?
Yeah, we really cater to and come from the family office world as well, like Nick, but this is our first committed fund that we've put together in a traditional venture strategy. I'm an investor, my partners are investors, and then we have a group of other, like-minded and fellow investors that we've worked with historically in the past. So, we wanted to put something together that was manageable and really stay focused. And I think to Nick's point, we also saw that there were a lot of entrance into the space, whether it was on the retail investor side, but clearly there were a number of people just put a shingle out and said, all of a sudden I'm a venture capitalist, or I'm a private equity, or I'm a with no incumbent experience from other sectors that sort of correlates to that. And so we got a little bit, a little bit gun shy early on, and we're concerned about some of the lack of sort of investment rigor that was driving a lot of the capital into the space. And so we were very, very patient before we started, investing in deals. And we typically take the lens of what happens in the rest of, the economy, and what are the similarities and differences in cannabis. It's not so different that you have to throw out the playbook and start from scratch and, go for these, like you were talking about, excessively high valuations at early stages, et cetera. And so we look at what are the other sectors that have, some similarities, and why would this be any different? I mean, we have smaller marketplaces. It's state by state. We like that as an investor. We actually really like being able to focus on specific states and have more of a market presence in a smaller contained market with the opportunity to expand later. But if we look at, healthcare and the companies that are in that space, their failure rates, like Nick was pointing out, there's a high degree of failure. That's just entrepreneurship. So those are table stakes, whether it's cannabis or not. And so we always want to try to counterbalance. We found a lot of companies that were what we call band-aids, right? Where they were temporary solutions for a temporary problem, and decided that this was, but they weren't really long-term companies. So we had to really tweak our investment thesis and get comfortable before we put any capital to work.
The neat thing about the two of you that I think gave you guys potentially an opportunity that's a little bit more unique is that, funds and groups of funds, they have these certain mandates that they need to abide by, whereas you guys really got the opportunity to just pick and choose when you would get involved and how you would get involved. And I'm sure the terms of your involvement vary from investment to investment. Is that right?
Yes, I mean, look, we are a fiduciary. We are a little bit different from Nick, investing their own capital, although we have our own capital, and and so we like to say we eat our own cooking in the fund. But yes, we do have a responsibility for investors, and so we're very institutional in the way in which we behave with the companies that we invest in. Our requirements for reporting, our requirements for board oversight, and these are not passive investments for us. As any early stage venture investor, the companies require a lot of hands-on attention and help and support and helping them build value. Yes, we have some flexibility in the structure, but I think, and I point this out in the book, I think that there will be, historically, we'll look back at, there will be a group of investors like Nick, like ourselves, who were, sort of cannabis centric at a time when there were very few institutional investors in the space. And then I think in the next 3 to 5 years, in particular, as the regulations in the US continue this groundswell of momentum with new states coming online, both medicinally and recreationally, I think we will end up seeing incumbent venture get around or address a lot of those issues with their LP base, where the stigma starts to go away with the sector. And we will see incumbent VC come in and participate in the space. They'll just remain sector focused to what they were historically investing in. So if they're a SaaS fund, then they will continue to invest in SaaS companies, but now they'll just invest in SaaS companies that also have a cannabis aspect, right? So I think there will be a small cohort of incumbent, cannabis first venture groups like ourselves, and then eventually incumbent venture will come in and bring their expertise and sector focus to the space.
Nick, what are your thoughts?
Yeah, no, I echo Ross's comments, and I think a big factor, and it was a huge benefit to us, was kind of this federal illegality that kept kind of traditional institutional money out for us. It really gave us an opportunity to kind of use the flexibility that we had just as a sole family office to access deals that we otherwise wouldn't. And that's something that honestly I've already seen changing, mainly kind of post November election and the Georgia runoff. Is big money is coming in. You're seeing some kind of these big MSOs raise hundreds of millions of dollars, filled by just a couple groups now. go back, 2014, 2015, 2016, when we got involved, it was kind of just a hodgepodge collection of who was willing to even invest in the space at the time. But I think, one of our key elements, and kind of like what Ross said, was always being an active investor and being a value add investor to whatever capability we had, whether that meant, connecting our portfolio companies with other family offices we kind of know and work with, whether it's connecting it with different kind of tech partners or whatever it may be. I think our ideal focus has always been a value add investor that's mutually beneficial for us as well as the companies we're investing in.
Okay, well, that's a perfect jumping off point for where I want to take this dialogue next. So first of all, I just want to explain for those of you that might live under a rock, cannabis is still federally illegal in the United States of America. State by state, they do have the option to become medicinal or recreationally legal within that jurisdiction and manage it from there. Because it's federally illegal, there's a few intricacies that are different. One is that the banking system is under federal government law. And so there's something called the SAFE Act, which essentially, and you guys can maybe clarify this a little bit, but essentially cannabis companies can't have a bank account. They can't use the banking system to run their operations, to pay taxes. From what I've heard, they have to show up with a truck full of cash. And so there's a lot of glitches in what's become such a massive industry, based on the fact that it's federally currently illegal. One of the other glitches is that if you touch the plant, you cannot be listed on a US stock exchange. And that's where the CSE has come in. We've opened our doors that if you are operational in a jurisdiction that is legal, that we would allow you to list with us. And that's why we're seeing so many of these companies come to the CSE. And we welcome them with open arms. There's a bunch of different opportunities. Ross, I'd like you to talk about, because I know that you're involved in a few of them and look at a few of them, but there's kind of the VC investors, angel investors, private equity, going into public equity, and then we get into kind of the funds, the institutional, equity as well. So Ross, I'll let you start off because you're a bit earlier stage in your investments, aren't you?
We are, and I think the one sort of lens that we start with, in particular with the founders that we're working with, because it's all about finding the companies and the teams to back, is just we want to work with founders that have a comprehension as to the different types of capital that are accessible to companies at different points in their life cycle. And it all comes down to the cost of capital, right? So I said earlier about this creativity around lending. So there are private lenders that are out there that will lend to cannabis companies, but they're extremely expensive and they're looking for equity returns. And some of them we think are actually, not legal in terms of the interest rates that they're charging. And if they came under any usury law scrutiny, might be a challenge. Again, sort of a temporary, rush in to put capital into the space. So for the founders and the entrepreneurs out there, always be cognizant of what the exchange is, what the cost of capital is. We saw in an earlier stage, I think private equity is a misnomer in this space. Show me a company with 5 years of historical audited financials that has, year over year growth rates that traditional private equity would be interested in. There's few, but they're few and far between. There's no sort of middle market private equity, space yet. And to Nick's point, I think we're seeing the barbell, sort of transactions happening where there's a lot of earlier stage angel investors, family offices, very savvy family offices filling, the gap that the traditional venture would normally fill. And then there's this sort of no man's land until you get to the mega deals that are happening with the private capital space, like Nick was talking about, that are really sizable. And for us, I think, we were always concerned about the valuation dynamic. But I think the positive momentum that we're seeing from both the Safe Banking Act in the US and then through all the things that you've done at the CSE and the pathways that you've created for companies that can find liquidity in markets and get to a more efficient marketplace at the right size. I think if we look at the momentum there, there's a lot of positivity to that. And I think those things will continue to mature and stabilize the capital markets for more and more opportunities, because we're only going to see more entrepreneurship, more startups, and more company development in the space as new states come online in the US.
Absolutely. And Nick, in our pre-chat, you kind of discussed, and tell me if I'm wrong here, but typically you've taken the stance of investing in companies that are kind of pre-IPO. Is that kind of part of your investment thesis when you're looking at companies to invest in?
Yeah, I mean, obviously, GTI was a specific case where were fortunate to get involved early on. But most of kind of the larger MSO investments, and this has been a kind of purposeful play on our part, is playing that private to public arbitrage opportunity, with kind of like the Cresco Labs, Verano, Ascend Wellness, all targeting those kind of couple raises in the year or two before the companies went public, and there's just tremendous opportunity kind of capitalizing on the discount that private operators often raise capital at. But yeah, but we have, we do look at other investments that are early kind of stage, not as quite as clear as a path to getting public. So we've looked at the full gambit. I think we've just gravitated heavily towards kind of the larger MSOs, as kind of a function of this kind of lack of easy capital that plagues the whole industry. In the context of, safe banking or federal legislation, it's an interesting just thought process to consider. I think post-election, a lot of investors, and you saw this in kind of like the February peak in the market, everyone was expecting quick legislation, quick changes, everyone to uplist immediately to US exchanges. And as an investor in kind of these MSOs, that wasn't necessarily an ideal situation in my mind, just because the kind of opportunity with a limited set of capital for operators, that meant the companies that can access, larger equity raises or access, I think we just saw with GTI raising debt at a 7% interest rate. That is a fundamental like differentiator between them and kind of early companies that are still raising at, 15% interest rates. So I think obviously federal illegality creates a whole mess of challenges, 280E, banking, you name them, but also creates kind of opportunity to see who are the companies that can operate in this somewhat difficult environment. And as investors, it also gives us the chance to invest in a space where institutional money has not entered yet. And I think kind of that slow and methodical, up into the right growth path that we're already seeing despite all of these challenges with federal illegality, is almost a better situation for some of these operators as opposed to full-fledged legalization right now. And every, big money, big tech, big pharma, what have you, jumps in immediately, and there's competition everywhere. So definitely it's a plus minus game, and something we're watching closely. It's just the evolution of the kind of state versus federal landscape.
Okay, so I want to touch on the word MSO is sprinkled throughout almost all conversations, especially U.S. cannabis. So MSO is a multi-state operator, and it's funny, Ross. I met Ross. I think it's been about 2 years now. Time is weird now that we're in lockdown, but I think it was about 2 years ago. I met Ross at one of his events, and that was really the first time you really started hearing about MSOs. And so tell me if I'm wrong, Nick. The play of the MSO is essentially that if a company can get as far reaching across the United States as they can in different jurisdictions, that eventually when it's federally legal, they'll be positioned in a way to become, kind of a behemoth. Is that kind of the idea behind most of these?
Yeah, I mean, I think you'll hear different opinions from different groups, and even within MSOs, there's a big kind of wide range. You have the Curaleafs of the world who are in 20 plus states, and then you have TerraSend, who's concentrated in like 2 or 3. Both are billion-dollar companies, and both are MSOs. But the difference between those is quite vast.
Right.
I think you'll have some people who say that, look, if you look at the kind of language and desire of kind of U.S. legislatures who are ultimately going to create whatever federal legislation is there, they're going to be highly incentivized to protect these state programs that generate local, taxes and jobs and all that. Like I know here in Illinois, there's kind of failed horribly at it, but there's supposed to be all these social equity licenses given out, including like craft grows in a future interstate market. Little 5,000 square foot grows here in Illinois have no chance of competing against giant grows out on the West Coast. So I think if you talk to, certain operators, they'll say like, hey, this state by state market is somewhat here to stay, even if, interstate walls fall to some extent down the line. Whereas I think other companies are clearly positioning themselves in light of a future interstate market. And I think there's, opportunity for both. I think the MSOs of today, perhaps some of their cultivation might get in an interstate trade open market get shut down just because of inefficiencies, and then they'll buy a giant grow out west and eventually feed their stores that way. So I think it's always a good discussion to have in terms of evaluating your investments and seeing how they fit into what a future federally legal market would look like.
And Ross, what do you think the value proposition of MSO, like as an investor, for our audience watching, wanting to invest in US cannabis, would you say MSO, that's kind of a safe bet? What are your feelings about MSOs?
Well, there's no safe bets, right? So certainly,
Thank you for the disclaimer. That's very important.
Exactly. I'm not giving any investment advice. So for us, for example, anecdotally, we do not believe in the future or the model of vertical integration. And we don't believe in it because it doesn't exist in other incumbent markets. And we have yet to find an entrepreneur, in particular at an earlier stage, who's fantastic at agriculture and growing, who's fantastic at logistics and supply chain, who's fantastic at brand development, who's fantastic at retail, who's fantastic at regulatory. Like, you start to tack all those together. So we look for different parts of the supply chain where we can go participate, where there's different, efficiencies to be had. So for us, that's how it directed our investment thesis. But that's, 3-4 years of, rolling up our sleeves, being involved, looking at hundreds and hundreds of deals. After that, I think the silver lining is that people in our communities believe that cannabis is here to stay. So the stigma is going away. The legislators are picking up those messaging. Legislation is changing. There are great arbitrages out there, like Nick said, the public to private arbitrage, fantastic. There's the license arbitrage. We don't invest in non-operating, assets like licenses and things, but there's people who've done really well at it. So I think it's figure out what your strategy is. What are you trying to accomplish? And just research.
So let's peer into your expertise a little bit. Nick, I'm going to start with you. When you're looking at deals, first of all, what are you looking at these days? So we've talked about kind of the growth of where things are at now. We've explained, the legal jurisdiction. What do you look at day to day? What kind of deals are you seeing? What part of the sector are you seeing? And what kind of sizes are you seeing?
Yeah, no, it's a good question. And I think Ross spoke to it well, is just being nimble and being flexible when it comes to viewing just this ever evolving landscape in terms of US cannabis investing is important, because, I think we've traditionally kind of been focused on the big MSOs, and mainly just because they were the ones, raising the most capital, expanding the fastest, and honestly giving us access to liquidity most commonly. And that's obviously important as investors. But now I'd say, not necessarily just post-election, but as we get further along here, I think we've, pivoted more towards still MSOs, plant touching operations, but as well as kind of leading brands, in addition to kind of tech platforms that will grow alongside the industry as a whole, as opposed to like competing with, a million other companies. So I think identifying kind of those, whether it be like iHeartJane, Leaf Trade, Leaf Link, kind of just verticals that will scale with the industry as a whole, has been an increasing focus with us, because we think those investments kind of better survive any kind of abrupt legislative changes that might, like Ross said, if the interstate walls ever come down, the way that these companies are set up with infrastructure in every single state with 50K grows in every single state, that's probably not survivable long term. So being able to identify that and look at our current investments and say like, hey, are these positioned to pivot in that type of environment? And then when we look at new investments, we're seeing like, hey, can they scale with the industry as a whole? So that's been a big focus of ours. And then I would say on top of that is really the state-by-state market still does create opportunities, just because, we have totally new sets of licenses being issued when these state markets open up. So identifying those possibilities, like Virginia has 5 licenses for the whole state. New Jersey, they've issued 12 licenses for the whole state. New York, similarly, the 10 medical incumbents will have tremendous opportunity. So I think still, it's identifying kind of traditional plant touching operators that can fill in those new state markets, as well as trying to identify new opportunities that will grow with the industry as a whole.
Ross, what are you seeing when you're looking at deals? I mean, I think we can all chuckle a little bit, some of the deals that we looked at 7 years ago and how dramatically that's changed. So what are you seeing today, Ross? What type of deals do you look at?
Yeah, I mean, I would echo Nick's sentiments quite a bit. I mean, we focus on teams and people. So we are, focused on the founders first. And, we've invested in all kinds of other sectors, and I've been an entrepreneur my whole career. And so I think we have a muscle memory and a lens that we find the right fits for the founders that are right fits for us. We're not the right capital source for everyone, but for the groups that we are, there's certain dynamics. And I think that those founders in particular in cannabis have a lot of resiliency, a lot of resourcefulness, a lot of sophistication in different elements of operations. And that all speaks to the business opportunities, as Nick was saying as well. We look for durable long-term companies that can be built, right? So can you weather this? Because the one thing we know for sure is things will go sideways at some point and things unexpected will happen. But that's just the laws of the game. That isn't just necessarily relevant to cannabis. So are you building a sustainable, long-term, durable company that can be a large, player in a large growing market? And with that, I think now we're really shifting our focus and have directionally been going down a lot of the healthcare applications. We have a lot of experience in healthcare otherwise, so it's a good fit for us. But it's everything from some of the biotech developments. I mean, we have an investment in the first company to map the genome of the cannabis plant. We have an investment in a synthetic CBD. Super excited about that's, we look at the applications for that and being able to scale that science. We like testing labs and things that are supply chain driven, that are science-based. Plant-based medicine, healthcare applications, pathways to the FDA, those all start to get very exciting to us, both because our investor base and our success in the past, but also where we see the market going. And really, it's still green space out there. There's a pun intended, right? There's still a lot of, growth to happen. And we still think this is a parade about to turn on Main Street. And we look for the entrepreneurs and founders that are going to be at the front of that line.
It's so exciting to watch. I mean, it's I've just been in awe watching it all play out, and I'm so excited to see such, big players come out of it, whether it's investors such as yourselves or the companies. Um, I want to kind of end off with two things. First of all, I'll start with you, Nick. What do you is there a certain part of the sector you think will be the next disruptor? Is there something that you think is, I mean, MSOs have been on everyone's the tip of their tongue for a while now. It'll continue to grow as it does. Do you see something else coming to the sector that'll be a bit of a game changer?
Yeah, I think it's a good question. I think MSOs will still kind of be the focus for at least some time, just in terms of, I mean, if you look at who's raising hundreds of millions of dollars in capital and what opportunity that gives them, it's clearly MSO focused. But I think over time, it'll go from, a lot of these markets, these operators can put essentially anything on the shelf and it gets sold. Over time, that'll change. Markets will get more competitive, pricing will come down. So kind of operational expertise in that regard, quality of products from flower to vapes to edibles and all that. So branding quality will become more and more important. So I think kind of identifying leading brands, like for ourselves, we invested in Kiva, and more recently, Can is a low dose beverage that's number one beverage in California, just brought here in Illinois recently. So that's been a development. And then I think definitely on the tech side, there's just so many different opportunities that, similar to the rest of the space, kind of traditional operators in SaaS or what have you, have not entered cannabis, because they're not allowed for compliance or other reasons. So you've had different companies kind of fill those niches. And I think we've seen that more recently, like with the Weed Maps going public. Dutchy just raised that, almost a $2 billion valuation. I think people are seeing the value in not only the kind of the specific vertical that these tech platforms serves, but the data that they have, because they have data just on millions and millions of transactions. And even if like their platform, whatever kind of fee they charge isn't their main revenue stream, the potential value of that data that they have and what they could sell in the future, I think is pretty tremendous and something we're focusing on.
That's a really good takeaway because data is king these days. And anyone who's gathering that type of data, who's using it, when they're using it, how they're using it, where they're using it, that is data that is king these days. Ross, any thoughts there as well on what might be the next disruptor?
No, again, echo Nick's sentiments. I think it's very prescient and similar to some of the ways that we're looking at things. I would say we kind of look at it as sort of two driving forces, and where we want to come out in the middle of what comes out of that is, really, the regulatory arbitrage, right? I think that's where ultimately everything comes down to. And the two driving forces being large incumbent industry getting more and more comfortable and watching what happens with the Safe Banking Act. So, for example, ag tech, right? So, and agricultural technology, large players, large pharma, large biotech, getting more and more comfortable. They're going to drive on one end of the equation, and then really nascent innovation, early stage development of really dynamic founders and entrepreneurs that are solving very complex problems like pathways to the FDA. And I think when you start to see both of those converge, that are being driven by the regulatory, trends, I think we're going to see a lot of really, really innovative and game-changing, developments and companies come out and really, establish really, the great companies of the future. We think they're being built right now.
Amazing. Okay, my final question. I feel like we could do this all day long, guys. You're wonderful. Thank you so much. My final question, Nick, what would be your advice in your due diligence practice? This sector is very unique. I know even the accounting for this sector is a bit more unique. What would be your advice to someone that they should add this to their due diligence process when looking to invest in cannabis in the US?
I would say like the number one advice I always give is kind of just roll up your sleeves and do the hard work. It's amazing how many investors don't even dig into, the full financials that companies post on, CEDR or the CSE or what have you. Because like you said, it's, you can look at press releases and take away one thing from what the company is trying to tell you about their performance. And then you look at the numbers and you're like, oh, this is very different than the story you're trying to tell. So I'd say, yeah, doing the hard work and go look at those financials, go look at the MD&As and read through those 100-page documents to get an understanding of, especially right now, just because it is a state-by-state approach, you have to understand what exactly a company's assets are in every single state, what their position is, where it's located, what kind of money they're putting towards that. And then reviewing it over time, get a sense of, is this company moving towards a goal? Are they, making progress on, developing better gross margins or EBITDA margins over time and scaling the business well? I think you can take a lot away from just kind of digging into those financials.
Absolutely. Ross?
Again, spot on, Nick. I love it. Look, do the work. Actually do the due diligence. I think that point is will never be inappropriate. And for us, the thing in the market is there are so many opportunities to invest in. We have to remember that a mentor of mine told me this years ago. Deals are like trains, right? There's a new one every 7 minutes. So don't fall in love with a specific deal and understand that there's an opportunity set out there. And in particular in cannabis at this time, there's a lack of institutional capital at the stage that we invest in. And so I think we kind of look at it and our job is to find every reason to say no. And if we can no longer say no, then we make an investment.
That's really good advice. And I think you also brought up, both of you have brought up is, and I just wanted to point it out, is understanding the legal framework in the jurisdictions where they're operational. I remember seeing a deal come through. I won't mention the deal or where it was, but somebody was talking about a cannabis company in a country where it wasn't legal. Making sure that it's legal before you write a check, and what some of those legalities are and what some of the frameworks are. And you also mentioned, which I think is really important, is management team and the groups involved. Would you say it's also valuable to also know some of the big investors in some of these? Like, do you look at some of the other people writing checks?
For sure. And for us, I mean, every deal we've done has been a syndicate and co-investment. We're never the sole capital partner. And it's wonderful to work with sophisticated groups like Nick's organization, his family office, we can leverage and share intelligence and diligence. We all have different perspectives, different approaches, and it ultimately helps the founders and the companies, because you're getting a team of investors that are all on the same side of the table post-transaction, that can all bring some unique perspective to how to build value and extract value in the investment that we're all partners in.
Amazing. Any final thoughts, Nick? Any final thoughts you want to leave us with?
I mean, just on the industry as a whole, I think we started in 2014 and, had a general idea of what the future market might look like, but it was kind of a shot in the dark to some extent. It's nice to have seen, this industry evolve over the past 7 years and develop real companies with real financials to review. But I think we have, this is a decade-long growth opportunity ahead of us. With just crazy compound interest rates like unseen in other industries, and it's due to the federal illegality, it's just not as known right now about what the true potential is in investing in U.S. cannabis.
Well, I always laugh because, it's that reminder to people, this isn't a new industry. It's just new to the capital market. So, that is one element of it that's very interesting. It's been here a very long time. It will continue to be here. We're just figuring it out from the capital market perspective. Ross, any final words before we sign off?
No, thank you so much. And Nick, it's a real pleasure talking with you, and been watching your firm and some of the great things that you've been doing. So it's exciting to collaborate with the people that are really driving the future success. And Anna, everything that you do with the CSE, you're true innovators out there in the space, and we're always delighted to have these great conversations with you.
Thank you both for joining me today.
This is the Cannabis Investor Series.